This is the Bybit app, and I believe everyone must have registered on this exchange. So we are using this exchange. This is what I use because of its interface, very simple, and it's very it's seamless to use this service, to use this exchange Bybit. The registration link is attached with this video if you are yet to register. So now this is the home page of Bybit. After you must have deposited to the exchange, this Bybit exchange, the next thing is to click on assets, then transfer your funds to derivatives. Usually you have to deposit to spots. You can see the spot balance is 0. Derivative is where we trade futures. So you click on the transfer, and you are going to select where to transfer to. You can see from funding account to derivative, but your funds when you just register should be in your deposit, your spot wallet. So you click on here, you click on spot, you select spot, then to derivative, then you select this, you click on this coin. By default is always in BTC, but you are going to select USDT since you deposited USDT. You meant to select USDT, you click on max to transfer the amount you want to transfer, then confirm. Your funds will automatically be on your futures trading account, which is called the derivatives. So that's how to transfer to the Bybit derivative account. So as I told some of you that okay, the minimum trading is $20. So I'm using this small capital to make illustration about what trading features can be like, with the explaining about the leverage and what have you. So follow this aspect very closely and ensure you are not distracted. For you to know that you can start trading, if your mind is committed to it, you can start trading with as low as $20, and you can even have your position size for as low as $1. That is why we have leverage, and this is the practical aspect of it. It doesn't mean that you are not welcome with higher capital. Of course, it's also very important to have higher capital. You know how it is. The more capital you have, the more you earn, the more you'll be able to play around different instruments to trade with. You understand? So for the case of newbies or those who are just starting up, okay, I believe $20 should not be too much for you to put into test on trading your futures trading. Apart from using the demo account, which I will be explaining later. I will make a video on how to use demo account for you to back test any strategy you feel will be suitable for you. So as a newbie, you can just test this with $20 and let's see how it works. First thing first, you should be using 1 to 5% or maximum of 10% of your total capital. Meaning out of this $20, you should be entering a trade with no more than highest $2, which is 10%. So how do you trade with $2? That's why we have leverage. The leverage on each asset is different. For BTC, the leverage is higher, is the most is the highest of all the assets of the coin we are trading. BTC leverage is up to 100x. This is it. When you click on this place, this isolated, where you see isolated 100x, once you click on it, it shows you are going to your leverage. So we are going to be talking about the margin and margin later, because this isolated and cost margin are different type of margin. I will post that in the channel. That's not going to be a video. So this is, you see, leverage, long leverage, short leverage. If you are going on long position, it means you are buying, and if you are going on short position, it means you are selling. So for BTC, it has the highest of the leverage that you can use, up to 100x. Some other coin are not up to 100x. Let's check. Some other coin, once you click on that BTC, you click on please enter preferred trading pair. Trading pair means you have to select what you are looking for. Any coin you have to trade should be input here. But I have some coins I have traded, so let me check for this GTR and let's see what leverage it has. So this is GTR USDT pair. Once I click on this cross 15x, You see, this has a maximum of 25x leverage. So leverage on each asset differs. And now, how do you calculate your leverage? How do you know your leverage practically? Your leverage, the minimum leverage you can have is 5x, meaning that your margin is multiplied by 5. If you are entering a trade with $2, automatically when you place that leverage on 5x, your margin is automatic. Your total cost will be $10. That is 2 times 5, which is 10. If you are entering a trade with $5 and you put it on 10x means you are multiplying your 5 times 10. I hope you are understanding what I'm saying. So let's assume I want to take a position. I'm not going to trigger this position. Let me just put it here. And I want to use $2 of this. You see? The moment I stretch my I slide this long arrow, then it will automatically put me the price I want. Okay, this is $3 automatically. I want to put it on 2x. So this is $1.99, meaning I'm using $2 to enter this trade. And this trade is on 15x, meaning that I'm multiplying this $2 multiplied by 15. That will be my leverage. That will be my total margin. I don't know if what I'm saying is making sense. You can drop your question. So with that, when I take my take profit as 25%, because I'm using 50%, because I'm using leverage, this is what I will be earning. If I put my stop loss at 5%, this is what I will be losing. I want explain this appropriately in the next video on how to trade signals. But for the sake of this leverage and margin, this cost is your margin. Where you are saying this cost is your margin. Value. The total value I'm entering this trade with is $29 because of my leverage. This cost means margin. This available balance is your total capital that you've deposited in that trade. Your total capital you deposited in that trade. The value means your total amount you are entering with. You know, ordinarily I'm risking $2 to buy a coin of $25.49, 45 cents. As you can see in this value, I'm risking $2 cost, which is my margin, to buy a coin of $29 because I'm using 15x leverage. Now let's change this leverage to 5x and see what my margin, my value will be like. Okay, because of this leverage, I've changed the leverage to 5x. Because of I'm using lower leverage, I'm gonna be using higher margin. Your leverage has a lot to do with your investments. Your leverage has a lot to do with your investment. Because I'm using lower leverage, I'm going to be using higher margin. Meaning to enter this trade on 5x leverage, I need $44. Can you see? And the value of that, the total value of that trade at cost margin of 5x will be $221. Let's calculate it. $44, 44.45 times 5. Can you see? Can you see that? So it means that my margin will be multiplied by 5 for me to borrow, for me to enter that trade, which means I'm entering this trade with $222 total value. But I will need a margin of 44, which is even higher than my total capital. So meaning that it's even possible for you to use a higher leverage and a lower margin, or you use it depending on which pair you are trading. For this pair now, for me to trade on 5x, I need a higher leverage. For some pair like BTC, I can enter BTC with as low as $2 and use higher leverage of 100x. So if I put this back to 25x, let's see what my margin will be. Automatically, I can enter on 25x. I can enter this trade with $9. You see what your leverage has to do with your trading. Now I can reduce it to $1 and still have $48.56. But one thing about this leverage is, the higher your leverage, the higher you earn in terms of profit, and the higher you lose when the trade goes against you. As interesting as this leverage looks like is, see, let's go to our stop loss and take. This is where to enter your take profit and stop loss. So you can see that this is actually different from what I was supposed to earn. Like when I initially entered 5x 15x leverage, I was going to earn 90 cents. But since I increased the leverage to 25x, look at what I will be earning as my take profits. And let me put it on 5% stop loss. See, I will be losing like 72 cents more than, because of the charges fee. You know, exchange is going to charge me, but the charges fee for this Bybit is lower. So you see, the higher your leverage, the higher you earn and the higher you lose. That is why your leverage is the most important part of your risk management. It's the number one part of your risk management. I hope what I'm trying to say is understandable. The moment you miss it from your leverage, you missed that trade. If you are greedy to increase your leverage, also be aware that when the trade goes against you, you are also losing much. Your leverage is the number one part of your risk management. The number two part of your risk management is your position size. Your position size. Number one is your leverage. Number two, position size. The amount you are using to enter this trade. Because I'm entering this trade with almost $14 now. You see what my profit is under 25%, and what is my stop loss is under 5%. Now, if I should lower my margin to lower size to $2, you see what I will be earning with the same leverage. So I'll be earning 49 cents under 25% profit, and I'll be losing 10 cents under 5% stop loss. So your position size and your leverage determines your they are the two most important aspects of your risk management. If you cannot put your leverage accordingly, just let it stick to your brain that your leverage determines your profit and it also determines your loss. Then number two, your position size, the amount you are putting, your cost, which is your margin, determines the amount you are going to be losing for that trade and the amount you are going to be getting as profit for that particular trade. Your cost is your margin. Your value is the total amount you are entering with your leverage, and this available balance is your total capital. Your leverage can be adjusted from here, this three line with this where the roads cross. By default is always on course or isolated. I'm going to explain that later. Then this is what we have. To change your leverage, you click here, then you adjust it. The higher your leverage, the higher you earn and the higher you lose. The lower your leverage, the lower you earn and the lower you risk when the market goes against you. As simple as that. That is just the practical aspect of this leverage. Always remember that the higher your leverage, the higher you earn, the lower you lose. The lower your leverage, the lower you earn, the lower you lose. Available balance means your total capital. Your cost means your margin. Your value means the total amount of the trade that you earn, the total of what you entered the trade with, using your margin and your leverage. That's it. So in our next video, it's gonna be on how to trade with signals. Then you can see, you can learn appropriately how you to use this cross and isolated margin, then how to put your stop loss and take profits. Then boom, that's how we go from there. So guys, I hope you all enjoyed this video, and please don't forget to subscribe. Let me know where you are missing it. Make your comments. Thanks for watching. See you guys in my next video. Bye.